Welcome to your Mortgage Insider update for October the 9th. We are on our third day of this week with much elevated interest rates after the update from last Friday's Bureau of Labor Statistics jobs report, where it was reported a 4.1% rate of unemployment, which is down for the second month in a row, and then a much elevated 240,000 jobs brought into the economy, way above expectations. Previously, we've talked about the Fed. They're leaning towards jobs and full employment as their second of the two mandates that they're going to shift their focus to right after they dropped their primary interest rate by 50 basis points. Now we see the jobs are actually doing pretty good in this most recent report. Their next meeting won't be until November when they get the next jobs report for October. So that'll be updates to come. But as we look at the charts, interest rates have moved up substantially. Starting with the 10-year Treasury, up to 4.04%, rounding up here, pretty substantial. That's up 2 basis points today. But as we look back, that's up pretty substantially from 3.76% closed on October the 2nd, just before that jobs report started to leak out with better data. We had 3.77, jumped up to 3.8, and then just continued to climb and broke back above the psychological level of 4%. Right now holding as a floor, not quite hitting the 100-day average, but we are testing levels that had not been reflective of overall interest rates since into July, where we've seen this downward cycle since then. We've had its ups and its downs, but for the most part, we had been trending pretty substantially downward until this most recent report. So as we see this increase in interest rates, just know that reflects about 0.5% in the mortgage rates. So where we were, trending down, getting to the low 6% level, 6.1%, that's now going to move back up above 6.5%. Just in the short period of time we've seen in this reporting, we are going to have the Consumer Price Index report come out in inflation this week. That should come out to be relatively tame, and tamer inflation will continue to guide the Federal Reserve. Their current plans lowering interest rates further, maybe another quarter to 0.5% by the end of this year, doesn't really seem off track, but based on this response that we've seen in the bond market, it's still very touchy out there with the long-term outlook. Where are interest rates going to go? They might not be going down as fast as we'd like. Have a great week.